Hello friends, welcome to my YouTube channel. Today we will discuss about gross and operating profit. Expert entrepreneurs keep close track of their company sales. They, they know their revenue figures on a daily, weekly and monthly basis. They also maintain a careful watch on their cash position. Most business owners would know the exact amount they have in their bank account on any given day. However, the level of knowledge that business owners have about their firm's profits is not as precise. The picture becomes even hazier when you consider that your financial statements provide you with three different profit figures: gross profit, operating profit, and net profit. What do these numbers convey? What's the difference between gross profit versus net profit versus operating profit? Is one more important than the other? What's the relationship between them? As a business owner, familiarizing yourself with some accounting rules and concepts can be vital for the well being of your business. One of these concepts is the question about gross profit can be vital for the well-being of your business. One of these concepts is the question about gross profit versus net profits versus operating profit. It's crucial that you know the difference between these relevant figures. Gross profit versus net profit versus operating profit. The main difference is when a reference is made to a firm's profit. How can you tell whether it's about the gross profit, the net profit, or the operating profit? Is there any way to determine the difference between the gross profit versus net profit? Or for that matter, how can you make the distinction between operating profit and net profit? Bear in mind that the amount alone won't help you to differentiate between gross profit versus net profit. You have to find out how the sum has been calculated. What is the difference between gross and net profit? When you are analyzing your company's gross profit versus net profit, the critical issue that you have to remember is that gross profit takes only the cost of goods sold into account. The net profit, on the other hand, is the profit after all expenses have been considered. This is the essential difference between gross profit versus net profit. Gross profit versus net profit versus operating profit in real life. Let's use an example to get a better idea of gross profit versus net profit. While we are doing this, we will also calculate the operating profit. What does Cathedral Banker's income statement for 2018 tell you about its gross profit versus net profit? You can see that the firm's gross profit is $20,000. However, after deducting all the cost that it has incurred, this falls to a net profit of $11,000. Do you want to learn more about each type of profit? Keep reading. What is gross profit? Gross profit is the amount that remains after you deduct the cost of goods sold from your revenue. Alternatively, if you don't make any goods, it's what remains after you subtract the cost associated with providing services. A higher gross profit provides your company with more money to meet its other expenses. While gross profit is an essential measure of profitability, there are other profitability measures that you must also consider. What is the formula for gross profit? Here is the gross profit formula. Gross profit is equal to revenue minus cost of goods sold. You should remember that the revenue figure indicates net sales. Net sales are calculated by deducting discounts from the sales amount. You also need to reduce the sales amount if customers have returned any goods. To calculate your gross profit, you also need to know the cost of goods sold. These are the costs that are directly incurred for producing sold products. Some of these costs are the cost of the raw materials that have been used to manufacture goods, the wages paid to workers who are directly employed in the production process, the cost of finished goods that are purchased for resale, packaging and shipping cost. How do you know which costs are to be considered for calculating the cost of goods sold? Remember that the critical issue is whether the cost can be directly attributable to the production of goods. Indirect costs are usually not to be taken into account. Gross profit rate. How should also know how to calculate the gross profit rate for your company. This is the percentage of sales that is in excess of the cost of goods sold. Gross profit rate is equal to gross profit multiply 100 revenue. How to calculate gross profit? An example: if your revenue is say 1 lakh dollar and the cost of goods sold is $16,000, your gross profit is $40,000 and your gross profit rate is 40%. Gross profit 1 lakh dollar minus $60,000 is equal to $40,000. Gross profit $40,000 multiply 100, 1 lakh dollar is equal to 40%. Once you can carry out this calculation, you can use the gross profit rate to estimate the gross profit you would make with an increase in sales. What is operating profit? Your operating profit tells you the amount that your company is making from its business operations. In other words, it's your profitability. Operating profit does not take into consideration interest and taxes. What is the formula for operating profit? Here's the operating profit formula. Operating profit is equal to revenue minus cost of goods sold minus operating expenses minus depreciation minus amortization. Which expenses are considered when calculating the operating profit? All costs that are incurred for your business activities must be taken into account. Thanks for watching my videos and stay tuned for next video. Thank you.